ever stop and think about how we actually track all that public money, billions flying around?
Yeah.
Or how we know if government programs are, actually working?
A huge question, right?
Yeah. It sounds maybe a bit dry, government audits, but honestly, it's super important. Think of it like financial detective work, uncovering facts, making sure things are transparent.
Protecting the public purse, essentially.
Exactly. So today we've got the rule books these detectives use. We're going to dive deep into them.
Mhm.
Our mission, cut through all the jargon, give you the shortcut to actually understanding how our money, our resources are looked after. We want to make this stuff clear, maybe even find some surprising bits.
Let's do it.
Okay, so let's unpack this. Government audits. It's not just auditors doing whatever they want, right? There are specific standards, a really detailed playbook.
Absolutely. There has to be structure.
So what are these core rule books, the ones auditors have to follow?
Right. So it really starts with the standards. And for government audits, you've basically got two main sets. First, there's GAAS.
GAAS.
Yeah, generally accepted auditing standards.
Yeah.
These are kind of the fundamental rules, the baseline for all financial audits. Think of it as the basic grammar for checking financial reports.
Okay, so GAA is universal, for any company or organization.
Pretty much, yeah. It dictates how auditors check if the financial statements are, fair and reliable. Private company, public entity, GAS is the starting point.
Got it. But you said two sets.
Exactly. And this is where it gets really specific for government. We also have GAGAs.
GAGAs, okay.
Generally accepted government auditing standards.
Right.
And everyone pretty much knows these as the Yellow Book, literally because the cover's yellow.
Okay. Simple enough.
Yeah. And GAGAs, it doesn't replace GAS. What it does is it incorporates GAs by reference. So it takes all those basic rules.
Like the universal grammar.
Exactly.
Yeah.
But then it expands on them. It adds extra, very specific requirements just for government auditors. It's like taking a standard recipe,
Right.
but adding a whole bunch of extra steps and checks because, well, you're cooking with public money.
Makes sense. More accountability needed.
Precisely. The Yellow Book is absolutely foundational for any audit that involves federal entities or federal money. And here's a really key thing. State and local governments often adopt it too.
Oh, really? Even if there's no federal money involved?
Yep. Often they do, just because it's seen as the best practice, the gold standard for public accountability. And it applies to whole government organizations, specific programs, activities, you name it.
Wow.
And crucially, it also extends its reach to anyone who receives government assistance. So contractors, nonprofits, other non-governmental groups, if they get federal grant money, for instance, their audit very likely has to follow GAGAs. That's often part of what's called a single audit.
Okay, so its reach is pretty wide then.
Definitely. And within GAGAs, there are these two levels of requirements which add another layer of oversight. You have unconditional requirements. These are things auditors must comply with. Non-negotiable, like a law.
Must do. Got it.
Then you have presumptively mandatory requirements. These are things auditors should comply with.
Should. So there's wiggle room.
Well, yes and no. If an auditor decides not to follow a should requirement, they absolutely must document the reason why they didn't.
Okay, so there's a paper trail.
Exactly. It's not just, bureaucratic detail. It's a built-in check. It means there's always a record for why a certain procedure wasn't followed, which helps prevent cutting corners and holds the auditors themselves accountable.
Right, so it's this layered approach. GAS as the base, GAGAs adding government-specific rules on top with these must and should requirements. That tells auditors how to do the job. But what are they actually looking for? What kinds of investigations do they do?
Yeah, that's a great question because the scope is, well, it's huge. Government auditors wear a lot of different hats. Let's maybe walk through the main types.
Okay.
So first up, you have financial audits. These are probably the most common ones. They're done following the Yellow Book, incorporating GAS. They're really about the numbers.
Just checking the books.
Pretty much. The main goal is to see if the financial statements give a fair picture of, where the money came from, where it went, what the government owns and owes. All according to the accounting rules, GAAP.
Generally accepted accounting principles.
Right.
Okay.
Yep. They're checking if the books accurately show the financial health and activities. And sometimes this applies even if the government entity uses a special way of preparing statements, maybe something a regulator requires for specific funding.
Okay, financial audits, checking the money. What else?
Next, there are attestation engagements. Now, think of these as auditors giving their professional opinion, their stamp of approval, or maybe raising a flag on something other than the main financial statements.
Like,
Well, it could be almost anything management makes a claim about. Did a department follow all the complex rules for awarding a big contract? Did an agency report its performance numbers accurately? Are there internal systems for, say, managing project bids actually working effectively? It's about verifying specific claims or assertions. It uses general standards, but Gaga's adds more requirements here too.
I see. So verifying specific things beyond just the main financial report.
Exactly. And then the third main type is performance audits. These are really interesting. They're kind of like the government's effectiveness report card.
Report card, how so?
Well, their purpose is to give objective analysis, findings, conclusions, basically to help management and oversight bodies, like legislatures, actually improve how programs run.
Ah, so not just finding fault, but helping fix things.
That's a big part of it. Reduce costs, make better decisions, and, contribute to public accountability. Performance audits can look at a huge range of things.
What kind of things?
Well, we can break down their objectives. One big area is effectiveness, economy, and efficiency. This is asking the direct questions. Are programs actually meeting their stated goals? Are they doing it without wasting money? Are they using resources smartly?
Like, did the job training program actually get people jobs? Was it worth the cost?
Exactly, that kind of thing. Is the program cost effective? Are legislative goals being met? Another key area is internal control. Here, auditors check how well the entity's own systems and procedures are working to control operations, reporting, or compliance.
Like their internal checks and balances.
Precisely. Do their systems help them achieve their mission efficiently? Are their computer systems secure? Are there controls to prevent mistakes or, fraud? The latest Yellow Book even added guidance on looking at specific control frameworks like COSO.
Okay. And what else for performance audits?
There's compliance. This is more straightforward. Are they following the rules?
Yeah.
Laws, regulations, contracts, grant agreements. Are they serving the people they're supposed to serve?
Mm.
Playing by the book? And sometimes, performance audits even do prospective analysis. This means looking ahead, evaluating potential future events, or maybe suggesting actions based on assumptions about what might be needed down the road.
Wow, okay. So it's really broad, not just number crunching, but checking performance rules, internal systems, even looking forward. It really is like a full checkup for how government works.
It is. It's very comprehensive.
And you mentioned sometimes there are even more rules on top of Gagas.
Absolutely.
Yeah.
Yeah, beyond Gagas and Gagas, you can have what are called supplementary audit requirements. These often come attached to specific programs or types of federal funding. Auditors have to know about these and follow them too.
Like what? Any examples?
Probably the most common one is related to the Single Audit Act. If an entity gets a certain amount of federal financial assistance, they need a single audit, which has a whole bunch of extra compliance testing requirements layered on top of Gagas.
Okay, so layers upon layers sometimes.
It can seem that way,
Yeah.
but it's all about ensuring accountability for specific types of funding.
Right. Okay, so this gets us into the real nitty-gritty, doesn't it? How Gagas, the Yellow Book, actually changes how auditors do their work day to day. What are some of those extra steps or like unique things they have to think about?
Yeah, this is where you really see the Yellow Book difference in practice. First off, auditors need to look at previous audits and attestation engagements.
Check in the history.
Kind of. They should evaluate if the organization actually fixed the problems found in earlier audits. They need to ask management, hey, what did you do about that finding from last time? And then they use that information when assessing risks for the current audit. It's about making sure issues don't just linger year after year.
Good idea. What else?
Well, there's a much stronger focus on fraud, noncompliance, and abuse. Gagas really dials this up. Auditors must consider compliance not just with laws and regulations generally, but specifically with the terms of contracts and grant agreements.
Okay, makes sense. But you mentioned abuse. How's that different from fraud or noncompliance?
That's a really important distinction under Gagas. Abuse is defined as behavior that's deficient or improper. It might not actually be illegal, so not technically noncompliance, and it might not involve deception for gain, so not necessarily fraud, but it's still wrong in a public service context.
Can you give an example?
Sure. Think about a manager using their government staff to run personal errands during work hours. Or maybe consistently selecting a vendor that's, say, a friend, even if it goes against purchasing policies, but maybe doesn't quite cross the line into illegal bribery. Or maybe like excessive extravagant travel that serves no real public purpose.
Ah, okay. Stuff that just looks bad and misuses position or resources.
Exactly. Now, auditors are not required to specifically design tests to find abuse because it can be quite subjective, but and this is key, if they do become aware of potential abuse during their work, and it seems significant, either in dollar terms or just by its nature, they are obligated to do more testing to understand it.
So they don't hunt for it, but if they trip over it, they have to investigate.
That's a good way to put it. And related to all this, auditors also need to be careful not to interfere with any official investigations or legal proceedings if they find signs of fraud or noncompliance.
Hmm.
They report it, but they don't want to mess up a separate investigation.
Right. Okay. What else is unique in doing a GAGA's audit?
A really core requirement is how they go about developing a finding.
Hmm.
This is fundamental to GAGA's reporting. It's not enough for an auditor to just say, hey, there's a problem here.
No.
No, they have to meticulously plan and perform procedures to develop and document 4 specific elements for each finding. It's like building a solid case.
4 elements. Okay, what are they?
First is the criteria. This is what should be.
Yeah.
It's the standard they're measuring against: a law, a regulation, a contract term, maybe an established benchmark or goal.
Okay, the standard. Got it.
Second is the condition. This is the what is. It's the situation they actually found, the problem, the deviation from the criteria.
What's actually happening versus what should be. Okay.
Third is the cause. This is the why. What led to the condition? Why is there a difference between the criteria and the condition? Was it poorly designed policies, inconsistent procedures, lack of training?
The root cause. Makes sense.
And fourth is the effect or potential effect. This is the so what? What are the results or consequences of the condition? This demonstrates why it matters, why corrective action is needed. It could be wasted funds, program goals not being met, risks not being managed.
Criteria, condition, cause, effect. Okay, that's very structured.
It really is. And having all 4 elements makes the findings much stronger and harder to ignore. It provides a complete picture.
I can see that. Anything else on the doing part?
Yeah, a couple more quick ones. Audit documentation under GAGAS has extra requirement. Auditors must document that a supervisor reviewed the work supporting the findings, conclusions, and recommendations before the audit report is issued. It's an explicit quality control check. They also have to document any times they had to depart from GAGAS standards, maybe because of a law or a scope limitation, and explain the impact. Again, transparency.
Right.
And finally, auditor communication. Beyond the normal requirements, GAGAS says auditors should communicate relevant information to the people who hired them for the audit or requested it, and also to relevant legislative committees if the audit was required by law or done for that committee.
Keeping everyone in the loop.
Exactly. And there's even a provision that if, say, management refuses to correct a major error in the financial statements and a law prevents the auditor from just withdrawing, the auditor may issue a report detailing the problem directly to the governing body, and whoever legally needs to know ensures the truth gets out.
Wow. Okay, so the process itself is definitely more rigorous under GAGAS, which brings us to the reports, the end result that people see. What's different about reporting under GAGAS, especially with like internal controls and those findings you mentioned?
Yeah, the reporting is where you see some really significant GAGAS differences,
Wow.
all aimed at that public accountability piece. First, a simple one. The audit report must include a statement of compliance. It has to explicitly say the audit was done according to GAGAS, according to the Yellow Book.
Just stating it clearly.
But then, a really big one, the report on internal control and compliance. When auditors give an opinion on the financial statements, GAGAS requires them to also issue a separate report dealing with 2 things: the entity's internal control over financial reporting and its compliance with laws, regulations, contracts, or grant rules that could materially affect those financial statements.
A whole separate report. Wow, what's in it?
It describes the scope of the testing they did on internal controls and compliance. That'll look at everything, just certain areas. And it reports any findings, any problems they identified. But here's a super important point for you to remember.
Okay.
GAGAS does not require the auditors to give an opinion on whether the internal controls are effective in this report.
Oh, that seems like a big deal. Why not?
It's a different level of assurance. An audit specifically of internal control, like under AICPA standards for some public companies, aims to give an opinion a high level of assurance. The GAGAS report is more about identifying and reporting specific weaknesses or compliance issues they found during the financial audit. It's a here's what we saw report, not a the whole system is effective report. Does that make sense?
Yeah, I think so. It's reporting on controls and compliance tested during the financial audit and flagging problems, but not giving the whole system a pass-fail grade.
Exactly. It's a crucial distinction. And they issue this report whether they found problems or not. The main financial statement report will then always refer back to this separate Yellow Book report.
Got it. So how do they communicate the problems they do find?
Right, communicating deficiencies. So any significant deficiencies or material weaknesses they find in internal control must be included in that separate internal control report.
Okay. What about fraud or that abuse stuff?
Any material fraud or material non-compliance with laws, regulations, contracts, grant agreements, and also material abuse must be reported to the right officials within the audited organization.
Material abuse.
Yeah.
Like those examples of using staff for errands or crazy travel.
Exactly. If it's considered material significant enough, it has to be formally reported internally. And even findings that aren't material should still be communicated in writing to the appropriate officials. Nothing gets swept under the rug.
And when they present these findings in the report.
They must use those 4 elements we talked about: criteria, condition, cause, and effect. And they need to put the findings in perspective, explaining the nature and extent of the problem.
Okay.
And in some cases, if management fails to report findings externally when they're legally required to, or if they just don't respond properly to known problems, the auditors might even report findings to outside parties themselves. It's another backstop for accountability.
Wow. Okay. What else is unique in reporting?
Another interesting one is they must report views of responsible officials, meaning the auditors have to ask the officials at the audited entity for their response to the findings. What do they think? What are they planning to do about it?
Ah, so the organization gets to respond within the report itself?
Yes. If the officials provide written responses, those are usually included right in the audit report. If they only give oral comments, the auditor summarizes them in writing. And if the entity's response seems to contradict the findings or doesn't really address the issues, the auditor has to evaluate that response and might add their own comments explaining the disagreement.
What if the entity just refuses to comment?
Then the audit report has to state that they refuse to comment. It ensures a balanced view, or at least transparency about the lack of one.
Okay, that's quite different.
It is. Then there's handling confidential or sensitive information. Sometimes certain details can't be put in a public report. Gaga says the report should disclose that information was omitted and state the reason why. They might issue separate classified reports for authorized people. But the auditors have to think about whether leaving stuff out could distort the report's overall message.
Balancing transparency and necessary confidentiality.
Exactly. And finally, distribution of reports. Gagas encourages wide distribution to governance, the audited officials, oversight bodies like legislatures, anyone responsible for acting on the findings, and others authorized to receive it, making sure the information gets where it needs to go.
Okay, that covers a lot of the reporting differences. Anything else Gagas adds?
Yeah, a couple of other general considerations for financial audits under Gagas. One is about materiality thresholds. Auditors should consider reducing the level they normally consider material.
Meaning they sweat the smaller stuff more.
Kind of, yeah. Because it's public money, because of laws and regulations, and because government programs are often so visible and sensitive, even smaller amounts of misstatements or issues might be considered significant and need attention.
Right, public perception matters more.
It does. Also, auditors are encouraged for early communication of deficiencies. If they find something really urgent or significant during the audit, they shouldn't wait until the final report. They should communicate it early to allow for faster correction, especially if it involves ongoing noncompliance.
Get the fix started sooner. Good.
And one last thing, written representations from management. The letter management signs. GAGAS requires a few extra statements in there beyond the usual GAS ones. Management has to explicitly state they're responsible for compliance with laws and regs, and that they've told the auditor about all the laws and regs that could have a direct and material effect on the financials.
Just getting it crystal clear in writing.
Exactly. So pulling it all together on reporting. The main financial statement audit report looks similar to a standard one, but it must say it was done under both USGS and government auditing standards. And it must have that other matter paragraph pointing to the separate GAGAS Yellow Book report on internal control and compliance. That additional report is key. It details the testing scope, controls looked at, and flags significant deficiencies or material weaknesses, but crucially, remember, no opinion on overall internal control effectiveness over compliance. It's about identifying issues.
Oh, wow. That is a lot more involved than I might have guessed. So, stepping back, what does all this really mean for, for us, the listener, the citizen? We've gone through this really detailed world of government audits.
Mhm.
We've seen how Gaga's, the Yellow Book, takes the standard rules, GAS, and adds these really important layers focusing on performance, compliance, even preventing abuse, plus all those reporting requirements. It feels like it puts much tighter controls on things.
It absolutely does. And it serves a vital purpose. This isn't just complexity for complexity's sake.
Right. So why does it matter so much?
Well, understand these layers, even just the basics we've talked about, lets us, as citizens, better scrutinize how public money is used.
Mhm.
It helps us hold government entities accountable. It connects these, seemingly dry audit details back to the really big picture. Public trust, good governance, making sure our tax dollars, our grant money, actually does what it's supposed to do for the community.
That makes perfect sense. It's the mechanism for trust,
Well,
really.
it's a key part of it, yes.
So, maybe a final thought for everyone listening. The next time you hear about a new government initiative or you see a news story about public spending, maybe don't just, accept the surface story.
Hmm.
Think about these Gagas requirements we just unpacked. What kind of audit financial performance attestation might be going on behind the scenes or should be going on?
Hmm.
And what specific details, like those four elements of a finding or the report on internal controls, might actually be in an audit report somewhere, telling the real, maybe more complicated story behind the official numbers or the press release.
That's the question, isn't it? Digging a little deeper often reveals a lot more.